Okay, so we're going to get started. Welcome again to the ethics method. It's the fourth webinar in this series and the last one. Hopefully we'll be able to do some other webinars and some more free education in December. Okay, and it also depends a bit on you guys. You know, your feedback, how you like these webinars, if it really helped you or not. Okay, so today it's a very interesting webinar. Already? Okay, so today's a very interesting webinar because Asian scalping is one of the classical trading systems, and there's a lot of robots out there, a lot of bots out there. I will give you some names now. For instance, Pop Turbo, Aronis, and EA Boss, and many other EAs trade very similar trading systems to what I'm going to explain today. And it's very important that you really master this type of trading. I originally only traded this for the first years. I traded it manually, and I traded it both with bots and manually in the same account. So I became an expert in Asian scalping, and I took a very big hit in 2010. You may remember, 7th May 2010, there was a Greek crisis. Well, there has been many Greek crises, right? But the really very big one, the first one. And it was a crazy stormy night in the euro and the euro dollar and all other crosses, and it was very difficult. So I stopped trading manually, but it trades very well still. I'm going to show you some trades from last night. I just checked them out. I'm going to show you how I would have traded them manually. And well, if you have time to code this, then go ahead. And all of these bots are just improvements on this basic idea that I'm going to show you right now. Okay, so I hope you understand the trading system, and I'm going to give you the rules as usual. Okay, so there's a few new people here. I would like to know if you're doing manual trading or not. Just write me here in the chat, Sashi and new people, or maybe you were there the last webinar, but I really don't remember you, so it's my fault. But just tell me how you trade, how long have you been trading, so I have an idea. The other guys, they're repeaters. I know all of you, okay, many of you. So no need to introduce each other. The main thing here, the main idea of the FX method, if you continue trading the same way you've been trading till now, you probably will not get new results. You will get the same results. So you need to change your way of trading. You need to start with trading systems. You need to really start with analysis of trading systems, and you need to become a trading system analyst sooner or later. You can do it the hard way. You can lose several accounts and then come to the recognition that your trading method is wrong, or you can do it the right way and get educated through us and be faster. You know, have an edge. We talked about edge the other day, and not many people came. It's a pity. We recorded it. And probably these 5 videos, it was great with round-the-clock trading the other day, and we'll put them up next week for sure, this week for sure. Okay, so just very quickly, a trading system has different legs, and you need to really understand these legs. If you want this trading system, the template, you just need to open an account with AxiTrader. It's a great broker. They're regulated in London, as well as in Australia and in Dubai. And you can get 2 free EAs, and you can get these 2 templates for free as long as you find a $2,000 account and you show us a screenshot that you really funded the account already and you're trading maybe 1 or 2 trades on it. And if you want to have the historical data to test your trading systems, you need to find a $10,000 account, and you'll get all the historicals of 31 pairs that we will prepare for you for AxiTrader, right? Okay. So a trading system should have at least 3 out of the 6 legs I'm going to explain now. It should be univocal. It means that no interpretation about the rules. It's very clear rules. Everybody's doing the same entries and exits. Hence, 100% replicable, and it should be made. It should be automatable. That means we can make a robot out of it. Otherwise, it's not a trading system. So what are the 6 legs of any trading system? Entry rules, exit rules, filters, position management, money management, and risk management. Some people say that risk management is part of money management, but for me it's so important. I make a separate chapter because everything in trading, in my view, is about risk management. If you are good in risk management, you'll be a good trader. If you're bad in risk management, you'll be a terrible trader. There's only extremes in this regards, right? So any entry rule should consist of two parts, a hard or a setup, and a trigger or confirmation. It's the same, actually it's a synonym. Trigger and confirmation is the same, and setup and the heart of the trading system is the same. And these rules should have an AND logic, okay? And I'm going to show you with this trading system how it is. Basically, you can use, when you're trading ranges, you can use 4 different types of bands to define a range. Okay, I didn't put them here. I'm going to do it real fast. This is our trading system. We're going to show you later. You trade it only on M5 charts. Okay, you could go down to M1. You can do that. You can trade well also on M1, but it's going to be too fast for you to trade. So I'm going to go here. I'm going to put the euro dollar. Do you see the screen? Yeah. Okay, euro dollar, and I'm going to put here, I'm going to change the colors so you can see them properly, black and white. It's much better. And I'm going to put several bands here, and I'm going to go to the night, which is like 10 p.m. London time, which is actually rolls. Rolls means that's a very precise time. It's a very important time because the bank books get closed, and that means that we get the price when you go to the airport and you get euros for your pounds. Let's say, for instance, you would be going vacation to Paris or to Madrid or to Rome or whatever, and you would want to buy your euros. The price gets set exactly when the bank close is happening, which is at 10 London time. Usually, it depends on if it's summer or winter time. So I'm going to put here a Bollinger Band, and I'm going to explain just briefly, roughly, what Bollinger wanted to do with the Bollinger Band, what's the purpose of the Bollinger Band. And the Bollinger Band, it's a very interesting band developed by John Bollinger. By the way, I met this guy in Rimini in Italy, and he's still lecturing. Okay, and he developed these bands as a measurement of volatility, actually. What he did is he took 2 standard deviations. He just calculated the usual deviation, statistical deviation. I don't know if you guys remember the Gauss curve, a Gauss distribution, and the measurement from the moving average here in the middle. Do you follow this moving average to the extreme to here, which in this case is 15 pips, and here another is 22 pips. So well, I didn't take it exactly in the middle, like 16 and 16 pips. It's just a measurement of the deviation of the Bollinger Band of the price in the last 20 periods. So it's a good measurement of volatility, but it's very bad to trade ranges. Many people think the Bollinger Band is a good indicator for range systems, but it's not. It's a quite good indicator for breakout systems. And people confuse, and if you don't know really your trading families, we call them families. What is a trading family? For example, trending, it's a trend systems. Everything around trends, it's a family. Everything around breakouts, everything around scalping, everything around ranges, everything around counter trading, everything around reversals, but reversals is a subfamily. Reverse patterns, when the trend turns around, it's actually a subfamily of trend systems. Okay, so we could say there is 5 big families. There's other families which are quite special: arbitrage systems, spread systems, which are traded, for example, wheat and corn, or spread systems in the stock market. For example, Coca-Cola and Pepsi. You could buy cola, sell Pepsi. That's spread trading, and this could be another family, right? So thinking about trading families, you need to really find out first what is the main characteristic of your trading style or trading system, and then understand you're doing trends or you're doing breakout. What is the characteristic about range trading is that we expect when we are in a channel, first we need to detect a clear channel. For example, here, right? My goodness, let me take this out so it stays there. I mean, I see clearly here range, right? Oh, so annoying. Okay, and we see here that we have here the price is bouncing. I managed to put the line ever between this price and this price. We see here that the range got formed, okay, and what we do once a range is detected, because it takes time to detect, right? It must go one way first. Here was something happening. You see, it's like the support here became resistance later here. I don't know if you can see that. This is kind of the support here, and it became here the resistance. It's a zone actually, and well, it bounced back here, whatever. And in this period, it was ranging. And what we're doing in range trading systems, which happens 70% of the time, the price is ranging. What we do is we sell here. We expect it to come to the middle of the range. And I'm going to give you another term here that you need to know by heart. And we close at the middle of the range, and here we buy, and we close at the middle of the range. And the idea of Bollinger and of any classical channel indicator is that we exit at the middle of the range, which in this case is the moving average, and it's called a mean reversion system. Mean reversion systems are usually range systems. Mean reversion means that we expect the price went out to the second deviation, we expect it goes to the mean, 10 points here we make. We get it out of the 2 sigmas here, out of the Bollinger Band, we expect it to go to the mean, another 10 points we earned. But Bollinger is terrible for this. Okay, so there's other ways to paint a channel, okay, and one of them is envelopes. Envelopes is another channel indicator, and what it does basically, it's a moving average, but in this case we calculate percentage of the deviation, and what we do, which is quite different from Bollinger, is that we just clone or copy exactly this moving average. You see it's an exact copy, the blue. Maybe let me take Bollinger out of here because it might be confusing you. And what happens here is that in Bollinger we measured it, the upper and the lower band, and in envelopes we don't measure. We just copy from the, imagine there is a moving average in the middle. There is, but it's white. So let me go here, and because it's white you cannot see that. So whatever, let's paint it here like this. Like whatever. Okay, so we just move it up and down a certain deviation, and as you can see here, it's not a good measurement either for making a channel, although it's much better than Bollinger Bands. So envelopes could be considered in other kinds of range systems. It's a common mistake that people trade ranges with Bollinger Bands. It's a very common mistake, even with professionals. Okay. And we have another indicator for channels, another way to draw channels. Let me find it here, Donchan. And what Donchan does, it calculates the maximum or the minimum of the last X channels. I don't know if I have it here. If not, just look it up in the bands, maybe here. Okay, no, we don't have it here. It's a pity. I don't find the Donchan right now. I didn't prepare it. But what it does, it's a very good indicator for breakout systems, especially in stock market trading systems. But it's not a very good indicator for scalping. Okay. So finally, we arrive to our indicator, which doesn't come by default with the MetaTrader platform, and we can give you. It comes with a pendrive actually. That if you open your trading account with TaxiTrader, you got the pendrive, and it's a Keltner channel. Keltner developed his channel based on volatility. It's very different to the envelopes. Here's the Keltner channel. You see it here, the blue, and as you can see here, or you can appreciate here, it opens, it widens very strongly, because basically Keltner is only a moving average. You see that in the middle, and 10 ATR, an ATR, that means the volatility of the last 10 candles. So what he did, which is very smart, on the upper band, it's the volatility, which in this case was only 2.2 pips, you see that? and 2.9 here. So what he did is basically he calculated the volatility of the last 10, and you see here that the Keltner channel widens so much because there's so much more volatility in the last 10 candles, and we can see it here because there's two very big candles, and that's why Keltner widens. So Keltner is the ideal indicator for manual and automated scalping, and we find it in many, many, many robots. Many trading systems which I have studied include Keltner channels. How are we doing so far? Is that clear? So is it clear why we chose Keltner over envelopes, over Bollinger, over Donjan? It's a much better measurement, and it includes volatility in the formula, and it's just a 10 candle period. So it really widens, and you see here the Keltner channel is really narrow here. Very, very narrow, only 3 pips. You see that? It wouldn't happen with Bollinger. If I put here a Bollinger band, it will be so much wider. It wouldn't give me any signals, because what I'm expecting here, when I'm trading like this, I'm expecting it to be out of the channel, you see, and come to the mean again, mean reversion, to the average, come back to the average, here, break out here. You see the price. It's not a breakout system, it's a range system. So when it breaks out, I expect it to come back to the range, okay? And I usually go out in the middle, which it does very beautiful. And if I'm an expert scalper, I can trade a lot manually. The only flaw of this, you need to be awake in the night. Some people love this. I'm actually a night owl, so I prefer night trading than day trading. You know, no noises, no phones. Okay, so is that clear now? Why we chose Keltner? I just want to get some feedback on that before I can continue. Okay, perfect. So I'm going to go back to the slides. Once this was explained and clear, I'm going to give you first the entry rules of the trading system. And the first thing I would recommend, don't go to M30 or something. It's traded M5. You can go down to 1 minute charts. You can do that. You're going to get more signals. And the pairs which trade best are the ones that are sleeping during it's wrongly called, it's not the Asian session, because at 10 what happens is that New York closes and Sydney opens. So it's actually I would call it the Australian session or the Oceanic session, because we have Australia and Auckland open, New Zealand is open, Australia is open, but Tokyo didn't open yet. Okay, so I don't know why they call it the Asian scalping, but that's the usual name, but it's a misnomer. You see that? So the first thing we need to check is that the tick really broke above the upper or the lower band of the channel. That's the setup. So we are looking for moments where the price just on a tick basis. That's a bit of a problem with optimizing, but that's cannot have perfect systems. You see on a tick basis, it broke here. And I took a trade which is a bit later or earlier. Let me see when I took the trades here. But just any trade where the price, for example here, you see, it broke above, it would be a sell signal. That's the setup. And here it broke below. You see, that's a buy signal. We need the confirmation still. This is a sell signal. You see, this is a buy signal. Okay? And like this all the time. This is a sell signal, a buy signal. You didn't see it because the blue line is on top. You see that? Okay, just on the tick. And you have the band drawn, and as soon as you see that it's out of the blue band below, then you can consider entry point, although here it's not confirmed. Okay, so this is the first thing. Second thing, the trigger. The trigger is when the Williams percentage range, it's called actually. It's a very smart indicator developed by Larry Williams. You may know his history. If not, check it out in Wikipedia. It's a very interesting story. And he won a huge competition. His daughter won years later the same competition, or I think it was the same competition. And they were scalping. And what Williams does, which other oscillators can do, I'm going to explain it later actually, it's another slide. It's a very reactive to price. Okay, so what we need to do here is, it's not only that it breaks here, but we need to go below. Here, for example, we would have a setup. We have a tick here above the blue line, and if on the Williams percentage, which is here below, that's an oscillator, very reactive. I just put it only 9 periods. So it's 9 periods of 5 minutes. So it's only checking the last 45 minutes. It's really, I mean, scalping either you love or hate. There's no, it's very fast, you see. Even with, also with robots, it's very fast. So it must be below, above this level. I put minus 25 because Williams oscillates from 0 to minus 100, as you can see here on the right. It oscillates from 0, you see. 0 would be the extreme above, and minus 100 would be the extreme below. It doesn't oscillate from 0 to 100. It oscillates from minus 100 to 0. You see that? Being minus 100 in the lower part and 0 in the upper part. So I put here minus 25 and minus 75. This, of course, the robots gets optimized, these two values. And in this case, I got here a confirmation. You see that, yes, I'm above this level, and yes, the setup is correct. So that would be an entry. That would be sell. Okay? This is the first thing you need to understand for entry rules. Okay? The opposite for buy trades. Okay, I just took a sell trade as an example. Just shortly on Larry Williams indicator, it's very reactive. Actually, it's an inverse CCI. You can check out CCI. It's Commodity Channel Index. The formula, it's very similar. He just reversed it very smartly. And CCI we use a lot with trend systems. So he reversed it. He made it faster. He took a much smaller time frame, and he used it on very, very, very small time frames, like M5, right? Just for scalping, get a lot of signals, and trade a lot. And with compound interest, which I'm a strong enemy from it, but it was for a competition, he made it. He won. So the thing here is that it's much more reactive than an RSI, a stochastic. There's so many other oscillators, and maybe they're quite lagging. And this one is quite reactive. Of course, it's a bit lagging to price. Every indicator is actually lagging, but it's less lagging. So we can really get better signals. Problem here is that it's so reactive. Watch here. I mean, it goes from top to bottom in I don't know, in how many candles, in no time. We go here, you see, from buy to sell in 2 candles, you see, and here from sell to buy, you see here, it's just slightly above to buy in 4 candles. You know, in 20 minutes, you get the opposite signal. You know, in no time, it switches around extremely, which doesn't happen with other indicators. So if you don't adjust the period well, I put here 9. Imagine you would put here a much slower period. You would go here for 14. You would get terrible signals. You would be always late. You see, it changes completely. I don't know if you notice really how much it changed. And this is very, very, you need to be a very good optimizer if you make a robot, because you may really, if you don't know how to optimize, you'll get a lot of problems. Let's say, for instance, a very, very, very fast period 5. Look how it changes completely the picture. You see, what before was a signal is not a signal anymore. You get so many more signals just moving from 9 to 5 this period. So you must be extremely careful on that one. Extremely careful, and make your experiments and know really what you're doing. Okay, so I'm going to leave it here at 9 because I already took some examples here, and just be extremely careful here. Okay, so you can use it manually, of course, no problem. Question here. So the exit rules. The exit rules are very important in a trading system. The most basic exit rule is a stop loss. As a matter of fact, if you don't have a stop loss from the very beginning of the trade, once you enter the trade, you don't have a trading system. I repeat that. If you don't have a stop loss from the very moment you enter a trade, not a visual stop loss, not a panic stop loss, which is in Morse, a real stop loss, which is not further than 1 or 2% of your initial capital, you don't have a trading system. Okay? You're trading with, you're playing dice or you're doing something else. Okay? But you're not a systematic trader. So where does the stop loss go? It very much depends. I'm going to give you here two choices. One is, take for example this example, which is not bad. I'm going to put it in red. It's a sell signal. It's red, crimson, whatever. Better not to have the same color than the stop loss. And this is a very clear entry. And we need to calculate here at least 20 pips, which we wouldn't have here on the screen. And I would need to make the screen like this. You saw that, and go here and find here 20 pips, which is precisely here, and that's the stop loss. Of course, the ratio is not very great, but you get such a percentage of good trades. You get normally above 70% of good trades on this trading system. Okay, so you shouldn't have a problem with that. That's the choice number one. Okay, fixed stop loss, and you need to check it out, but no, should be 20 or more, the stop loss. And the other choice is to take your ATR, calculate the volatility of the moment, and which is here. Let's find here ATR, average true range. Here it is, and multiply it normally by 2, and that would be your, let's take also a shorter period, like 9, the same as we did on Williams, and just multiply your volatility at the moment of the entry. It's 3, well, times 2 is too little. It says here that you should trade a stop loss of 6 points. It's 2 for close. Although it would have worked for this trade, but in this case, it's like too close by, okay? You can also make a rule the worst of both, right? It can be programmed this way, and it worked very well. And in the end, it's all about optimizing. You can take the worst of both, meaning the worst of the 20 points or 6, which in this case would be 20. Okay, so there's where the stop loss goes. Okay, I showed you both possibilities. And now in the positive realm, let's watch where the exit is. And there's very different possibilities here, which is very good, very many good ideas. One of them, let me put it back so we see it properly, like this. Let me put here a bit of a, yeah, you see it better now. Okay, you remember that we entered here, and actually the entry, I think I'm moving another entry here from another trade. I hope I'm not making a mistake. And here's the entry. I draw the entries usually in gray, in dark gray, so I don't confuse them with exit points or whatever. And we will go here for either the tick, which is already beyond the mean reversion point. You see the mean reversion point is the moving average here in the middle of the Keltner channel. You see that? Or the first candle that opens below. So this would be choice number 1, 3.5 pips. This would be choice number 2, 4 pips. This candle that opens for the open. Okay, both choices. Either just on the tick or on the open for the exit rule. Okay, so there you go. You have two choices. And I'm going to give you another way to deal with the exit later once we talk about position management. Okay, it's very smart to use also a fixed take profit. It works very, very well in Forex. You could just say, okay, 6 pips, 7 pips, whatever. As you may see here, for example, 5 pips would be good. It wouldn't go backwards. 5 pips in this case of this trade or whatever. and it should be above 4 pips, that's for sure, because if you're risking 20 on the stop loss, you should always go for more than 4 pips, ideally 5, 6, 7 pips, but this depends on the optimization. If you're trading manually, I will show you a way to exit this trade in 2 parts. Just do a partial exit, which I will explain later. Okay, so that's the first 2 possibilities, right? And the third possibility, which is just for security reasons, which is actually a neutral exit, is if I got here an entry signal, right? That is not going out. I would say the latest when you have the opposite signal here. You see it, that Williams, it was a sell signal here on the Williams percentage. Now it's a buy signal. So you better go out here, which is probably on this point. And it gave me a very good exit at 4.8. And actually, it's already, if it was a sell trade, and now it indicates you should be buying, although it's not confirmed here, it doesn't matter. That's called actually in automated trading the reverse signal, meaning that the indicator gave you the entry, and now the same very indicator with the same very parameters gives you the exit. Man, it's a good time to go. You're already in a stale-dated trade. You see, it's like a rotten tomato. You know, you bought the tomato. Usually, tomatoes should be eaten in whatever in the first 2 weeks. I don't know. And if you're already at the week number 3 and the tomatoes are still in the fridge, they are already stale dated, right? Same with scalping. You know, once this is already passing the maturity date, which is in this case, it's not anymore a sell signal, it's a buy signal, you should go out. Okay, so probably something like this, 5 pips here, and that's a good exit rule. Sometimes you just don't earn, you even lose 1 or 2 pips with this exit rule, but you rather lose 2 pips, right, with a smart exit rule than losing 20 pips, right? And this helps improve the trading system a lot. So consider this exit rule, this additional exit rule. These 3 exit rules are optional, meaning the one that hits first, okay? It's either 1 or 2 or 3. Okay, it's an or. It's an or logic. It's either I go out because I am already beyond the middle of the, I already reversed to the mean, right? And a little bit beyond. I reach a target, 5, 6, 7, 8, 9 pips, whatever, or I just have now a buy signal once I entered the trade with a sell signal, or the other way around. I have now a sell signal and I enter the trade as a buy signal with a buy signal, and the tomatoes are rotten and I just need to throw them. I just need to close the trade. Okay, it's not anymore what I expected, but I rather go out than losing money. Okay, is that clear? Because it sometimes seems very simple, but this reverse signals, reversed exit rule, it's very, very important in many trading systems, and people just don't get it. Is that clear? On this trade, at least. Okay. I could find another trade as an example. As a matter of fact, there is a trade here just before. You see that? And we just confirmed. Starts here. See? And latest here, I should go up. If I didn't hit the other 2 things. Or I can also just skip the first rule, passing the mean reversion, and I will tell you how to do that. Because I could also just go for a longer take profit, 9 pips, and the reverse signal. And it will depend really on one thing, which I'm going to explain you now, which will make the system much stronger, which is the filters. Okay. So now we have entry and exit rules. How are you guys doing? Is that clear or not? Just give me some feedback, because I'm going to make it more complicated now. Great. So John got it, and I need some other feedback. Okay, you got the basics, Bob, here. Okay, that's the main point. You'll get the videos, don't worry. everybody will get the videos, you can program it. There's so many more tweaks that can be done to the system. It's never ending. I mean, there's at least 200 bots that have been done based on this basic Asian scalping idea. There's so many bots on it. Just fine-tuning every pip. Couldn't imagine. Okay. Now, Turbo is not very dissimilar to what I'm explaining. It's only just extremely more complex, but the basic idea is the same. Okay. So filter is something additional we add to a trading system once we have the entry and the exit rules, and we're making money, it's profitable. We add another layer of edge, and we just take out bad trades and we keep good trades. And that's what we're going to do now. First of all, hourly filter. I would recommend this should be traded, I'm talking always UK time. I know some people here are from the US or from other places. Just whatever, adjust your schedules to UK time. And I would say that you trade it actually when New York closes and before Tokyo opens, which is 2 hours there. And I have found out another hour, which is very interesting, which is this other hour, which I call the sushi hour. And it's not a joke. I call it the sushi hour because Nikkei closes. They close the stock market in Japan from 11 Tokyo time to 11:45 Tokyo time. It gets completely shut down, and the brokers and traders, they go out for lunch, and we get really an additional channel. And I found it out just by optimizing, just by chance. And then later on I found out there was a great trading hour, and everybody was trading for Turbo in these hours, and I was trading for Turbo 1 more hour. So I was making 50% more money than everybody else because I was trading in 3 hours, and other people were just trading in 2 hours. So I call it the sushi hour. I'm very proud I found it out, and you can check it out in Wikipedia. Just write down Nikkei trading hours, and just Google it, and you will see that's true. And it's very interesting in these hours to trade the European crosses, such as Euro Pound, Euro Swissy, you name it. Even the US dollar against the Canadian dollar will trade very well at these hours. Okay, and you can even trade it on some current pairs like the Euro Pound, depending on the news of the day, of course, and nothing happened in UK or in Europe. And you could really trade it before, which I was doing here. You see, there's a lot of trades there. There's so much money to be made. You have 6 pairs, and you can get at least every day manually, and with robots you can get at least 5 trades per pair, 3 trades per pair. You're starting before New York closes, right? There's so many trades here. You can see that? How often it really breaks, and just go a bit earlier. Just let the European stock markets close down. They close 1 hour. So let London close down, the FTSE, and after that, wait half an hour, 1 hour, depending how the volatility was, and you can really trade it. You can really trade it at hours. You see here, which are not really Asian hours, but you get trades here. Okay, just have a look. Just get your Keltner channel on the chart. Put your Williams percentage, and you will see there's many trades to be made. Okay. So first of all, hourly filter. I gave you some advices here, which are the best hours. You could even go beyond. You could even trade it at before the Frankfurt opening. Okay. I would say at least 1 hour before. You could trade it at 5, 6 a.m. London time. You could trade as well. Of course, that's not a time to be awake if you have a job, but you would trade it, and you could automate it as well in these hours with other pairs of parameters. So you can really make a lot of money with this trading system, but you need to optimize every hour with different parameters. Okay, so I'm going to give you an incredible filter, which I lectured this system, but I didn't give the second filter the other time I lectured that, and this is like a bonus I'm giving you here. And the filter is very simple, very powerful still, which is don't enter the trade when you get the trading signal if you don't have at least 5 pips in your channel. Because, for example, You get a trade here. You see that? You get a trade here. But the width of the channel here, it's 4 pips. What money are you going to make here? Peanuts. You're going to risk it 20 pips to make 2 pips here? Makes no sense. Okay, so you need a bandwidth filter. Okay, you need to have here a filter that tells you don't trade when the channel is really not wide enough. Okay, I would say, of course, when you do it as a robot, you can optimize it, but there's so many false trades you will really avoid, which is it's a very good filter. You see, I treated this one because here the channel from the upper part of the channel to the lower part of the channel at least 5 pips. Here we have 6 pips, so you can make some decent money. The wider the better, but if it's too wide, we have another problem that we have too much volatility. Okay, here we get a lot of great trades here. Yeah, we get a lot of great trades. This would be one trade here, and then exactly on those spikes, this with Morph Turbo was making the big money because here you sell, you see, and it usually comes back very quickly, in matters sometimes of seconds, and you've made a ton of money on the spike. You know, sometimes you enter with delay because the robot takes time, and instead of entering here, you're entering here, and then immediately it will return back, and you made 5 pips, you're out. And that's why so many people made so much money with Turbo, because it was very reactive. Of course, manually you are not so fast, okay, but you have other benefits of manual trading, which you wouldn't have on automated trading, this trading style. Okay, so remember, the filter is if it's not wide enough, don't trade it. Okay, if it's not really making the certain amount of if it's not having a certain amount of pips in the channel from the top to the bottom of the channel, which we could call it bandwidth filter, okay, don't trade it because you make peanuts. You make 2 to 3 pips for nothing. Too much risk. Okay, it's not worth. Okay, so it's getting a bit of complicated. And I'm going to add something. It's working also in automated, but it's working especially well on the manual trading style of this trading system, which is to do a partial exit. It wouldn't make a sense here for position management. As you know, position management can be dealt with either with trailing stop or partial exit or break-even routines or adding up re-entries. We could consider re-entries in this trading system to come once later again after 3-4 pips. For example, here we have an entry here, and we can have another entry 3 pips later, 2 point something pips later, 3 pips exactly later, and then try to parameter only just 1 re-entry, of course, not 10 re-entries. And it will make sense. That's another option. That's one option. And the other, what I wanted to talk about was the partial exit. We have here the entry. I don't know if it's a bit confusing. You have here the gray line. You see that? This green line is belonging to another trade. I actually can take it out. So the trade we did before. The stop loss is down there. You see that? Okay. And we can exit the trade 50% once it has gotten it has overcome the mean reversion, right? It came beyond the blue line here. We exit half of the trade. For instance, we could have entered the trade 0.2, right? And we just close 0.1 here. And we wait for the other part of the channel here, or this contrary signal here, you see, which would be a very good exit point. And the other part, we exit with 9 pips. This will help a lot, both on the automated trading system and even more on the manual trading. You see, because now you're earning 9 pips plus 5, which is the average of it. I could add it, it's like 9 plus 5 is 14, divided by 2. So on average, you would be making here 7 pips instead of making 5. You see that? You would be exiting here at 5 4.8, something of the sort. But as you get here 9, so you get the average of 5 and 9, which is 7, which is a much better target than just exiting here. And you're securing yourself, you see, because here you secure 5 pips, and then you go out of with 9 pips, or here, or actually here, this one, once it just crosses the reverse signal, right? It's just one example that ran very well. And as you see here, it worked very well because, of course, we had this filter that was a minimum 5 pips here. And I invite you really, if you manage to stay up late, to trade it, or you could even trade it in the daytime if it's a very, 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 very calm day. You know, if you find a day with where the ITR is low and you know there is no news, and don't trade it exactly when, maybe rather before America opens, let's say in the morning, in the European morning, and it's really a calm day. You can also trade it on the Sunday night. On the Sunday night, it trades very well. On the Sunday Asian session, right? So that's for manual trading. I've been trading this manually for 1.5 years, as I told you, and I became an expert on it. And of course, we don't trade manually anymore, but it runs very, very well. And many of you, I think, you can try it first manually, and if you find a programmer that can program the rules I just told you, then you can compare it, right? So that's all for the system. I gave you 4 legs. As you can see, I give you entry rules, exit rules, filters, and position management. It's a robust system. It has 4 legs like a good table. A good table should have at least 3 legs. I give you 4, and just go ahead, tell me how it's going. Once you start trading it. Now, questions. Go ahead for the questions. Let's see if there is some questions here. 1 second, I don't see the questions. Maybe there's some questions, I don't see them. 1 second. Let's close them. I'm on my portable. I hate to do this on the portable because I have no space here. So, if there is no questions, does it mean you understood it fully, or there's a lot of doubts? I just would like to know if there's no questions, whether I was too fast. We still have 5 minutes to complete the full hour. Quite clear. That's great. Okay, just to comment a little bit, we still need to do the meeting, hopefully this week, of the people that are interested in the education. We'll be back in London in January, as you all know, in One Moorgate. And if you're new to these webinars, you can add us to Skype here, and you can write us over here down to this email, to the attention of Olga. Yeah, that's great. Okay, so Paul, you just will watch the video, and in our full education, you will get a lot about optimization. We've been in many countries. This was in Italy, a very big expo. This is with an Italian group of students that came over, and this is our office. This is the terrace, actually, and this is the training lab on the right on the picture with the group of students, same group you saw in the other picture. And well, this was quite a big group, actually. We have a screen on the left, and we have a lot of computers. And what we try is to really become a professional in optimization and in analysis of trading systems, because in the long run, at the end of the day, what you want is really to have a lot of trading systems. I gave you just 2 in these webinars. Hopefully, we will continue in December. I may prepare another one. At least you know now I give you a scalper, and the other one was a breakout system. We should maybe look into some trend system, and so you can really complete your basket of trading systems We actually have studied over 1,000 trading systems in the last 7.5 years. And for me, it's never enough. You know, I'm maybe too ambitious, but I really want to have studied more trading systems. Out of those, I selected around 55 trading systems which I love, which we trade live. Of course, not on the same account, on different accounts, but it has taken a lot of work to get to those over 50 trading systems that are worth. I'm not pretending that a student of ours will get 50 trading systems in 6 months. It's impossible. But if you manage in 6 months to really know very well 6 to 7 trading systems, really the scope, and you could really trade a portfolio professionally, which is the idea, right? That we pretend with our education. So if you don't have any more questions, we should make an appointment. The guys that are interested in the education will get back to you probably after Wednesday to try to make this appointment. And if you would like to have more webinars, just drop us an email. And the idea is to continue in December till January and prepare another series of webinars. You can also write to Axie Trader if you were happy with the webinars. Just give your feedback and hope to see you soon. I'm going to stay here for 1 minute more if you have some question, and if not, I'm going to close the room today. I couldn't enter, I read your email, Dave. I couldn't enter into optimization because it's a completely different topic, but I will enter it in the next webinar when it's appropriate, because today I didn't even open the strategy tester. It was not, yeah, I read your questions, don't worry. So John, the recordings were out. We had a crazy, we had on Thursday we had round the clock. On Wednesday I had a huge lecture in Spain, and on Friday. And on Saturday I had a full day of course like I did in London, the full day, 12 hours. So we are out for 2 days short vacation, so to say. We are actually not in Spain right now, and we'll be back tomorrow in the office, most probably, if not tomorrow, probably on Wednesday. All the videos will be up, including the one from round the clock trading. Wednesday, Thursday latest. Yeah, the recordings are fine. We just checked them out. They're edited. Only the recording of today, which hopefully will come out well, and we'll give you all the links. It's as I told you, sometimes it takes some time because we need to do some editing, but the videos are there. You can review them, and if you have questions, no problem about the videos, okay? But I think it was quite clear, the rules, and I think it was like kind of very, 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 with the screens, once you stop the videos, it will be very easy to trade for you guys, the 2 trading systems. Okay, as well as the manual optimization. I'm sure it's not very complicated stuff. You just need to practice. The guys that still didn't fund their accounts, because there was a few here in the room, and took the pen drive, and until you don't fund, I'm very sorry, you need to fund the account, obviously, and we need to get a screenshot, or at least tell the broker that you funded. I cannot give you the trading system. There's other people, they fund it immediately. We cannot make any exceptions here, okay? So if you want the trading systems and the templates, you need to fund. The conditions are the same for everybody. No exceptions here, okay? So I hope I answered all the questions, and I hope to see you soon. If you want to have more webinars, I'm more than welcome to prepare them. And just send me some feedback on the email or write Axie Trader, and we'll organize this for very soon. Maybe next week we can already start. I won't have a problem with that. Thanks for coming here, and we're going to close. It was exactly 1 hour, and I hope to see you soon, very soon on the webinars. Bye-bye. Have a good evening, everybody. You're welcome.